Welcome. I'm Frank Holsteen, Managing Director of Investment Management here at Wespath. I lead the team responsible for the Wespath investment funds. Today I'm joined by two of my colleagues, Hoa Quach, our Director of Public Market Investments, and Rashid Khan, our Director of Investment Research here at Wespath. Thank you for joining.
Hello, Frank.
We're only a few weeks away from the big US election. I would say it's been an unusual election so far, with the incumbent candidate, Joe Biden, dropping out and endorsing his vice president, Kamala Harris. It seems that it's currently too close to call the presidential election between Harris and Trump, and we hear it will likely actually be decided after election night because of the way votes are counted. Congress is also too close to call. Both houses, the House and the Senate, could go either way, leaning Republican or Democrat. We hear that the market dislikes uncertainty, and I think that's true, and this feels quite uncertain to me. And yet we observe that both stocks and bonds are up so far this year. And so I guess my question would be, how abnormal is this, and what is going on here?
And yes, Frank, it truly has been an unusual year so far. We looked at some information provided by third parties, and we're looking at the markets are up quite a lot this year. We looked at the 9 months of performance for S&P 500 for the first 9 months of this year, and sure enough, it's up more than 20% this year. But then we looked at a longer term history, and we see that there have been other good years, and as well as some bad years for the 9 months preceding an election. However, there's just a lot of factors that go into the election. It's not going to a performance of the market. It's not just election. This year, interest rates and Fed's activities are other factors that also impact in the markets. Earlier, our colleague Karen and Joe also spoke a little bit about it, and they mentioned how the Fed's activities and the interest rates are probably a bigger impact to market this year than elections. So we really do see some unusual movements this year.
So that's something about returns, but what about volatility? Markets moving up and down in a more amplified way during elections. Thoughts about that?
Yeah, so Frank, in most election years, you do see a greater amount of volatility because there's just more unknowns. You don't know who the candidates are, you don't know what their policy positions are, but back to 2024 being somewhat of an abnormal year, we see that returns have actually been pretty stable. As Raj mentioned in his previous slide, returns have also been high. That maybe has been driven by the Fed rate cuts, economic growth, but they've also been pretty stable. Despite the change in the candidates, earlier in this year, they were both known though. We knew that it was going to be President Biden and Trump, the candidates, and then once Biden stepped back, we knew that was Vice President Harris who was going to be a candidate. So that removed an element of uncertainty, and we had a little bit more stable markets throughout. But this chart we see here that in most years where there is a close election, there's greater amount of volatility because you don't know what's going to happen come election day. And it's really the uncertainty that drives volatility, and that's not what we've seen so far this year.
And what you said, Hua, is actually even more true if we look at a longer term history. So we look at a longer term perspective returns, and we notice that for 1 year period leading up to an election, the risk in the market, the volatility in the market is a little bit higher, and that's stemming from that uncertainty Hua spoke about. It's also a little bit higher for 1 month after the election when you compare election year versus non-election years. However, other periods, though, we don't see that kind of a difference in volatility.
You just addressed market volatility leading up to the election and then following the election. How about market performance? We touched a little bit on market performance leading up to the election. What about market performance after the election outcome?
Yes, that is a question a lot of folks actually wonder about, and there may be some misconception that parties have a lot to say about how markets perform. We just haven't seen that in data. We looked at market performance over long periods of time after a win by a party, and we saw some data that goes back to 1930s. We've seen how portfolios perform for periods of 10 years after a party win, and we've seen after a blue win some really good performance and then some not so good performance. The same is true for a red win, where we see really good performance years and periods and then some not so great performance. It just seems like there really isn't much that you can guess about the market from just seeing what parties win. Markets are more complex than that.
Well, maybe we can take it for a moment away from big picture market performance and talk about potential impacts on market sectors or industries. Thoughts about that?
Sure, Frank. We do have a long-term focus here at Wespath, and we use our multi-manager approach to those funds. And our managers are definitely looking at implications of the elections on specific sectors, industries, and we know that it can have an effect on specific industries. But generally, the performance, as Raj has shown, has been there regardless of what the party is. But we rely on our managers to really do that analysis, and I think having that long-term approach is really going to help us through some of the uncertainty in the markets.
And so I think, is it fair to say we, Wespath, will not be adjusting our investment program in anticipation of the election, but the asset managers that we hire are certainly looking at the individual investments within their portfolios? The company.
Definitely, Frank.
Very good. Well, thank you both for joining us this quarter. Appreciate it.
Thank you, Frank.